Investing in stocks is a popular means to grow your wealth over the long term. But not all stocks are created equal, and some have the potential to deliver higher returns than others. In this video, I will walk you through 5 stocks that I believe have the potential to make you rich if you buy and hold them for the next decade. Number 1. Amazon. Warren Buffett once said, "One advantage of our publicly traded segment is that, episodically, it becomes easy to buy pieces of wonderful businesses at excellent prices." Amazon is one of the most successful companies in the world, and its stocks have been a top performer for several years. The company's dominance in e-commerce is well established. Also, it continues to expand its reach into new markets and industries. Amazon's cloud computing division, Amazon Web Services, AWS, is also a major growth driver. Subsequently, Amazon has several other businesses, such as advertising, which are rapidly growing and can potentially become major revenue generators. With a strong track record of innovation and a massive customer base, I believe Amazon is a stock any investor should consider for the long term for many reasons. First, it is the biggest e-commerce corporation, an industry that has grown tremendously in recent years and still growing. With a more than 37% market share, Amazon creates its products and services to meet customers' needs. This step will, in turn, lead to increased sales and revenue. Second, Amazon is a major player in many sectors, including streaming services and advertising. This diversification allows Amazon not to rely on any one business for its prosperity. If one business is struggling, Amazon can rely on its other businesses to compensate for the loss. So, Amazon stocks are more stable and reliable than companies relying on one area. Thirdly, Amazon is an innovative company. The organization constantly develops new ideas and ways to alleviate its products and services. This innovation has allowed Amazon to lead its competitors and maintain its dominance in the e-commerce industry. The company's focus on innovation also means it regularly expands into new grounds, creating new growth and revenue opportunities. Amazon's strong finances are another advantage for investors. The company has continually delivered robust revenue growth and profitability. In 2022, Amazon's net sales rose to $121 billion compared to the previous year, and its net income improved by 84%. Amazon also has a large balance sheet. Most importantly, Amazon stocks have long-term growth potential, a significant advantage for investors. The e-commerce industry is still in its infancy, with much room for growth. Plus, Amazon's expansion into new markets and industries means plenty of chances for future growth. There are many reasons to purchase and hold on to Amazon stocks for a long time. It would be best to do your due diligence to minimize risks by making informed decisions before buying stock. Nonetheless, Amazon is worth considering if you're looking for a corporation with an excellent track record of success and a bright future. Number 2. Alphabet, Google. Alphabet Incorporated, the parent company of Google, is one of the most valuable companies in the world. The company trades under the ticker symbol GOOGL and has been a top performer on the stock market for many years. First, the company's strong financial performance. One of the primary reasons why Alphabet stocks are worth buying is the company's strong financial performance. Last year, Alphabet reported over $200 billion in revenue. The company's market capitalization stands at over $1.3 trillion. Alphabet has consistently delivered strong financial results, which has helped to support the company's stock price. Another reason Alphabet stocks are worth buying is the company's diversified revenue streams. While Google is the company's primary source of revenue, Alphabet has also invested in other businesses, such as Waymo, Verily, and Calico. These businesses can become major revenue generators for Alphabet in the future, which could help further drive the company's stock price higher. Also, Google is one of the most recognizable brands in the world, and Alphabet has leveraged this brand recognition to its advantage. The company's strong brand recognition has helped to attract top talent, which has enabled Alphabet to continue to innovate and grow. This advantage has helped to support the company's stock price. Besides, Alphabet is known for its innovative technology and has invested heavily in research and development. This step has enabled Alphabet to develop cutting-edge technologies like artificial intelligence, machine learning, and autonomous vehicles. These technologies can transform industries and create new revenue streams for Alphabet, which could help drive the company's stock price higher. The company has strong leadership. Alphabet's leadership team, including CEO Sundar Pichai, has a proven track record of success. The company's leadership team has been able to navigate challenges and capitalize on opportunities, which has helped to support the company's stock price. Also, the company's leadership team has a long-term vision for Alphabet, which could help to drive the company's stock price higher in the future. Lastly, Alphabet stocks are worth buying for a variety of reasons. The company's strong financial performance, diversified revenue streams, strong brand recognition, innovative technology, and strong leadership all contribute to the company's long-term growth potential. While risks are associated with investing in any stock, Alphabet's strong fundamentals and long-term growth potential attract investors looking to invest in a high-growth company. Number 3. Microsoft stock. Warren Buffett, one of the wealthiest persons in the world, said, "Price is what you pay, value is what you get." And that is what you get when you buy stocks from Microsoft. Microsoft is one of the world's largest and most successful technology companies. Microsoft began in 1975 by Bill Gates and Paul Allen, and since then it has grown into a giant in the tech industry. Microsoft is known for its operating system, Windows, and productivity software such as Microsoft Office. Significantly, Microsoft's success extends beyond just software. The company has also invested significantly in cloud computing, gaming, and hardware. The most obvious reason is strong financial performance. Microsoft has consistently delivered strong financial performance. In the fiscal year 2020, the company reported revenue of $143.015 billion, an increase of 14% from the previous year. The company's net income was $44.281 billion, an increase of 13% from the previous year. Microsoft's strong financial performance shows the company's ability to meet market conditions standards. Microsoft has made significant investments in cloud computing, one of the fastest-growing segments in the tech industry. The company's cloud platform, Azure, is the second-largest cloud platform in the world, behind only Amazon Web Services. In the fiscal year 2020, Microsoft's Intelligent Cloud segment, which includes Azure, reported revenue of $48.365 billion, an increase of 17% from the previous year. As more and more companies move their operations to the cloud, Microsoft is well positioned to benefit from this trend. Microsoft's gaming division, Xbox, also significantly contributes to the company's success. The gaming industry is multi-billion-dollar, and Microsoft is one of the leading players in this space. In the fiscal year 2020, Microsoft's gaming segment reported revenue of $11.594 billion, an increase of 2% from the previous year. The company's recent acquisition of ZeniMax Media, the parent company of game developer Bethesda Softworks, is expected further to strengthen Microsoft's position in the gaming industry. The company has also invested significantly in hardware, including the Surface line of tablets and laptops. In the fiscal year 2020, Microsoft's more personal computing segment, which includes Surface, reported revenue of $48.258 billion, an increase of 6% from the previous year. The Surface line has been well received by consumers and has helped Microsoft establish a foothold in the hardware market. Finally, Microsoft is also a reliable dividend-paying stock. The company has consistently paid a dividend since 2003, and in the fiscal year 2020, the company paid a dividend of $2.04 per share. Microsoft's dividend yield is currently around 1%, which is not the highest in the tech industry, but it is still a reliable source of income for investors. All these factors make Microsoft stock a worthwhile investment for investors looking for a reliable and stable stock in the tech industry. Number 4. Visa. Visa is a global payments technology company connecting people and businesses from over 100 countries and territories. Visa is the world's largest payment network, with an estimated 3.5 billion cards in circulation and over $11 trillion in payment volume processed annually. For many reasons, Visa stocks are worth buying and holding onto for a long time. Visa has consistently delivered strong financial results over the years. In the fiscal year 2020, Visa's net revenue was $23 billion, a 7% increase from the previous year. The company's net income was $12.1 billion, a 5% increase from the previous year. Visa's earnings per share, EPS, were $5.10, a 7% increase from the previous year. These financial results demonstrate the company's ability to generate consistent revenue and profit growth. The digital payment industry is growing rapidly, and Visa is well positioned to benefit from this trend. According to a report by Grand View Research, the global digital payment market size was valued at $43.5 billion. Visa is a dominant player in this market, with a 50% market share in the US and a 60% market share in Europe. Visa has a strong competitive advantage due to its massive scale and network effects. The company's network connects consumers, businesses, banks, and governments, and the more participants join the network, the more valuable it becomes. Visa's network effects create a significant barrier to entry for competitors, making it difficult for new players to enter the market. The corporation has a diversified revenue stream, which reduces its exposure to any single market or product. The company generates revenue from transactions, data processing, and international transaction fees. Visa also generates revenue from digital payment solutions, such as Visa Checkout and Visa Direct. These solutions enable consumers and businesses to make payments quickly and securely, further expanding Visa's revenue streams. Visa has a strong management team that has consistently delivered results for shareholders. CEO Al Kelly has been with the company since 2016 and has overseen significant growth during his tenure. Under his leadership, Visa has expanded its digital payment solutions and made strategic acquisitions to enhance its capabilities. Visa is also a strong company with a dominant market position, diversified revenue streams, and a strong management team. The company's financial performance has been consistently strong and well-positioned to benefit from the growing digital payment industry. For these reasons, Visa stocks are worth buying for investors looking for a long-term investment in a stable and growing company. Remember to like and subscribe to the channel if you have made it this far. Number 5. Johnson & Johnson. Johnson & Johnson is one of the largest healthcare companies in the world, and its stock has been a top performer for many years. The company's diverse portfolio of businesses, which includes pharmaceuticals, medical devices, and consumer health products, provides it with a strong competitive advantage. Conversely, Johnson & Johnson has a strong track record of innovation and a massive customer base. Since the demand for medical products will rise as the population ages, I believe that Johnson & Johnson is a stock an investor should hold for the long term. Investing in stocks can be a great way to build wealth over the long term, but not all stocks are created equal. Investing in high-quality companies with strong competitive advantages and a track record of innovation can increase their chances of earning strong returns over the next 10 years. In comparison, it's important to remember that investing always carries risks, and investors should research before making investment decisions. Share your thoughts about this video in the comments section. Remember to subscribe to my channel for more videos. Thanks for watching, and see you at the next one.